This conference will now be recorded.
Hello, and welcome to the next installment of the 10 things you can do for yourself in 2020, or any year really. Today I'm going to be talking to everybody about public benefits, which was, if you're following along in these slides that I originally presented, this would be slide number 4. However, because of the sheer amount of information out there that I want to cover in the depth of detail, even a broad overview requires for what I'm going to be talking about today, which is Social Security. I'm breaking these into at least 2 different parts, maybe 3 or 4. When I get into Medicaid and Medicare, we'll see if I can fit those into one episode or if I'm going to need to break them into individual episodes. My gut's telling me I might have to break them into individual episodes just because there's so much information. So today, I want to talk about Social Security. And when I bring up Social Security, when people hear Social Security, it means a lot of different things to people, as evidenced by the stimulus package. When people are saying, well, if you're receiving Social Security benefits, you're going to get a stimulus package. Then you have people saying, well, if I'm receiving SSI, am I going to get a package? If I'm getting SSDI, do I get a package? So let's break it down a little bit more. For purposes of this seminar or this discussion, SSI, supplemental security income, is just that. It's SSI. The only thing when I'm talking about Social Security, the only thing I am talking about is Social Security retirement. The other 3 items that I'll be talking about, and I'll be talking about SSI, SSDI, disabled adult child benefit, and Social Security retirement today. So each of those, SSI, SSDI, and disabled adult child benefit, for purposes of this discussion, are not referred to as Social Security, although they are a Social Security benefit. When I say Social Security, I'm only talking about Social Security retirement. Let's dive in. Supplemental Security Income, or SSI, the federal maximum for this year is $783. Some states are going to subsidize that with an additional payment. Many people will not receive that full amount because they may be found to be receiving benefits in kind, especially if you have a child living with you who's receiving SSI. So if you're getting services in kind or ISM, it's $589 a month. That will be further reduced if you have any additional unearned income or earned income. So unearned income is going to be things like pension, it could be SSDI, it could be stock dividends. Those are all unearned income, money that you are not working and earning a wage for. Earned income, it's going to go down by $1 for every $2 of earned, and then there's going to be additional opportunities for you to save some of that money that I'll show you in a second. You cannot have more than $2,000 in assets, that's savings accounts, investments, cash value, life insurance, etc. And generally speaking, if you're under the age of 18, many will not receive a benefit because when you're under 18, they look at the parents, how much the parents are earning, and what their assets are. And if it's over 18 or 18 and over, because you can file the month you turn 18, then it takes the individual's situation into account. So let's show you a calculator real quick. When you're trying to figure out how much you're going to receive in Social Security, this is a calculator we give all of our clients. We're happy to work with you on it. There are other calculators out there. You don't have to use ours. It's just one that we found very useful. So you come over here, you figure out what their annual income is. This is assuming somebody is working. So some of the categories you have: earned income exclusion. So if they're working while they're in school, then they could be. You would put that in here to subtract it. Every income you have a general income of $20 exclusion, meaning it doesn't count the first $20. If you're working and you're earning money, you subtract an additional $65. Here's where I said half of the remainder. If you have expenses related to allowing you to work, you would plug that in here. If you're working with Social Security to become independent, and then you would enter that number here. So that's where your total, so here in this case, because your total countable income is 790, you're not going to receive any Social Security. However, if we dial this back a notch, and we say, well, instead of making that 20,000 a year, what if we make 19,500? Then you're going to receive Social Security. And now you'll get $13 of Social Security. In many states, this makes you eligible for Medicaid, and you're good to go. So when you're trying to figure out how much money you can make, a good ballpark is about $1,625 a month or $406 a week, barring any of these other opportunities for withdrawals. You can earn $1,600 a month and still collect some Social Security. So that's the calculator. I just wanted to review for you real quick. Again, we work with all of our clients on those. The objective is to get people working, because at the end of the day, SSI is so little, $783 a month. That is not going to keep most of us housed and fed. So if we can get you working, getting you earning more money, and getting you off of SSI, or in addition to SSI, having some earned income, that's what we want to help you do. But we certainly understand many families, many parents are concerned and they want their child to have the benefit because of the biggest thing is Medicaid health insurance. We certainly understand that. And we want to help people understand how they can maintain their qualification for Medicaid while working and earning. And that's where a benefits counselor is going to come in. I am not going to go into, in any of my seminars or webinars, go into the world and the realm of benefits counseling. I do recommend, if you are interested and you have an open file with vocational rehab in your state, then to apply for benefits counseling. But it gets into much deeper detail of what you can do, how much you can earn, how you can earn more money and still receive your SSI. Moving on. Social Security disability income. So SSI has an asset limit, meaning you can only have so much money in your bank accounts, and it has an income limit, meaning you can only earn so much money unearned and earned income. SSDI, Social Security disability income, does not have an asset limit. You can have $10 million and still be on Social Security disability income. However, you cannot earn, for the year of 2020, you cannot earn more than $1,260 a month. That is substantial gainful employment. If you are earning more than this, then Social Security is saying you are not disabled to the extent that you need to receive SSDI. Because if you can earn this much, then you can work and earn a meaningful wage. Typically, it requires an individual to earn 40 credits. You earn 4 credits, a maximum of 4 credits per year. In order to earn 1 credit, you have to earn at least $1,410, and that's for 2020. So if you make $5,640, you've earned all of your credits for 2020. Now, SSDI, you can work and still receive SSDI. 24 months after you start receiving SSDI, you will receive Medicare. You may qualify for Medicaid depending on your financial situation. Medicaid matches, in many states, matches SSI's requirements. Some states have a lower asset limit. And there are some states where you can buy into Medicaid, even if you make as much as $75,000 a year. So I'm going to do a different webinar talking about Medicaid because there's so many nuances to it. Just know that with Social Security is an income, not a health insurance. You may receive Medicaid or Medicare, which are health insurance, when you're receiving SSDI, but it's not an automatic. With SSI, in many states, it's an automatic, you're going to get Medicaid. disabled adult child benefit. So this is an adult child who is over the age of 18 or over. To qualify, they'll have to have been diagnosed with a disability before the age of 22. 50% when they receive and when they are approved for the disabled adult child benefit, they will receive 50% of their parents' Social Security retirement benefit when that parent becomes disabled or retires. So what does that mean? That means when I retire and my Social Security, let's say my Social Security benefit is $3,000 a month. My son right now is receiving, for this example, $783 of SSI. I retire next year, so I start receiving $3,000 in Social Security retirement. My son will go from receiving $783 of SSI to receiving $1,500 of SSDI. Now remember, because SSDI is unearned income, SSI is reduced a dollar for dollar portion there. So he will lose his SSI. He will not get any money for SSI. But because he was receiving Medicaid, he will keep his Medicaid benefit. He will still have health insurance through Medicaid. Additionally, 24 months. So let's say he starts receiving, I retire in January, he starts receiving a disabled adult child benefit in January of next year. January of 2023, 24 months after he starts receiving disabled adult child benefit, he will be shifted over to Medicare. This is where he will now be on Medicare and Medicaid. When I die, he will go from receiving $1,500 per month in Social Security benefit, SSDI. That will go increase to $1,750, 75% of my original benefit. And that might be off, my math might be off, but it'll be 75% of whatever I was receiving. So that's the disabled adult child benefit. And this is why we're encouraging our families that we work with, when their child turns 18, even if the child's still in high school, go ahead and apply for SSI if you think the child is going to meet the Social Security definition of disability, which is cannot be engaged in meaningful employment for at least a year. And the condition is going to last at least a year. And apply for Social Security for SSI. And once the child has been approved for SSI, this is automatic. You don't have to fight for it. Now, if you go in and you try to apply for SSI when the child's 26, then you have to show what the age of diagnosis was. And it gets further complicated by, did the child work? If they did work, how much did they earn? How many credits they have, etc. Now, it does pay as SSDI, not SSI. So there is no longer an asset limit. You should still have a special needs trust or an ABLE account, and we'll talk about those in other episodes, because in all likelihood, your child is disabled enough that they cannot manage their own money. So a trust or the ABLE account is going to allow somebody to help them do that. But because it's SSDI, it does mean that you're limited to how much additional income you can earn. So going back to the previous slide, if you are making more than $1,260 a month, you could jeopardize that adult disabled child benefit. Now, there are qualified disability expenses, other things you can do to reduce that income. Planning Across the Spectrum is working on helping families and employers understand and create ways to employ people with disabilities with meaningful wages and still maintain their benefits. That is a project that we have, we're working on right now, and we expect it to be ready by the end of this year. But for now, this is what you need to be thinking about. Delay taking your Social Security, because as long as you can, help the household. make sure your child files for SSI if they are eligible at 18, and then be aware that if you were to go out in disability or retire, the child's getting 50% of your benefit. And it's whichever, if both parents are retired or disabled, it's gonna be whichever benefit is higher. And the same goes for, when a parent dies, if you have one parent who's retired and the other parent dies, it'll be whichever benefit is higher. All of that should be automatic. You shouldn't have to do anything with Social Security for that. Let's talk about Social Security retirement. This is typically what is meant when you hear somebody say Social Security. Most of the time, it's referring to Social Security retirement insurance. You become eligible if you're a worker. You become eligible at 62. You'll receive a reduced benefit. It's reduced by 8% per year from your full retirement age. So in most cases, people our age, my age, it's going to be reduced by 40%. My full retirement age is 67. And then if you wait until age 70, it goes up by 8% every additional year. So if you wait from 62 to age 70, you are increasing your potential benefit by 74%. So in real math, that means if you get $1,000 at age 62 and you wait until age 70, instead of receiving $1,000, what you're going to get instead is $1,740. That is a lot of money per month if you can afford to wait, if you can afford to delay. There are survivor benefits for spouse, disabled children, and several other categories I'm going to be getting into in a second. What I want people to take away from here is your income drives this. This is based on what you're paying into for insurance. When you are paying the OASDI, right? Old age, I don't remember what the S and DI stand for, but on your pay stub, the OASDI is your Social Security retirement is what you're paying into. If you're self-employed, many of us who are self-employed do our best to reduce our taxes, our gross income, as low as possible. Well, the downside to that is if you reduce your gross income, you're reducing how much Social Security tax is going to be paid. Maybe that's not a big deal if you don't have a child with a disability or your child doesn't qualify for disabled adult child benefit. But if you have a child who will qualify for disabled adult child benefit, then I would argue, and I typically recommend my clients, that you go ahead and don't try to reduce your income that much lower than $125,000 a year if it's not going to put you in undue straits. And the reason I say that is the maximum income that is being taxed for Social Security is $137,000 and some change. But for simplicity's sake, $100,000 to $125,000 is going to get you pretty close to maxing out on Social Security, which means that your Social Security benefit for your dependent child is going to be increased. The Social Security office takes and averages the highest 35 wage earning years. So out of 35 years that you're working, what are the highest years that you earn the money? For many of us, that's going to be as we get older, because in our early years, we're not making much. And for self-employed people who own businesses, we often have the opportunity to drive, be it through business, the cost of doing business, drive our expenses down to $30,000, $40,000, $50,000. Where if we didn't do that, it might be $80,000, $90,000, $100,000. And I'm just encouraging people to talk to their accountants. Taxes isn't necessarily a horrible thing. I know none of us necessarily enjoy paying it, but when you take into consideration the long-term benefit of your child receiving $1,500 a month when you retire versus $500 a month when you retire, based on how much you pay in taxes while you're alive and while you're working, I think it should be something to consider. Because if you don't do that, you have to, and you want to provide for your child, and you still want your child to get that $1,500 or $2,000 a month, then you're going to have to make the difference up in life insurance. And that's going to come into another calculator with how much money are you going to need to pay to set aside into the trust. Well, that falls back to how much money do you need to pay in premium to fund the life insurance? And are you going to be able to afford that? Are you insurable? This is how it all ties together, right? Your Social Security benefit that you are going to be able to leave to your qualifying child can reduce the amount of life insurance you need. And the health insurance can be covered by the Medicare and Medicaid for your qualifying child. So all of these things seem like they're individual problems, and many people will address them on a one-off basis. Financial advisors do this, accountants do this because they, a financial advisor's focusing on let's get you for retirement, let's save as much as you need. Life insurance, perhaps they're doing a pension maximization. Here's how much we can get you for life insurance to make sure your spouse gets this and you take the full pension, when maybe you should be taking the pension, a reduced pension, so your spouse gets the higher pension and the life insurance goes to fund the trust. The accountant's going to, their job is to help you reduce your taxable benefits. Well, in this case, as I just got done talking, and it's a lot of words, and I apologize, it may be better not to reduce your taxable income that far, so you can have more Social Security to leave your child with a disabled child benefit. The point of all this very long-winded explanation is don't try to figure this out on your own. At Planning Across the Spectrum, we have the role that I created to talk just about this. And it doesn't have to be with Planning Across the Spectrum financial advisors. I work with advisors across the country to help them help their clients get the best benefit. If you don't have a financial advisor, Andrew Comero is as good as they get, and I encourage you to talk to him. But don't try to figure any of this stuff out on your own. If you're listening to this and going, holy crap, this is just overwhelming, I'm not going to do anything. So the next two slides, this is just a slide to show you what the different options are. A widow or widower can get full retirement. If you're full retirement age, get 100% of deceased workers benefit. If you're 60, you can get a reduced benefit from 60 to your full retirement age. It's still not bad. Disabled widower, etc. So this is all available on the internet. It's all available on Social Security's website. If you're a divorced spouse, you would have had to have been married for 10 years and not be remarried. And that's how, there are limits to how much can be drawn. There's a family maximum. But for purposes of this discussion, I'm not going to go into it. Here's my contact information. I did my best to take this and distill it down. I do prefer giving this particular topic to a live audience because there's just so many questions, and I feel I can do a much better job addressing things in person. If you have questions, please email them to me. My email is right here. My email is right here. That's the best way to reach me. I don't answer the phone that well. I tend to ignore it if I'm being honest. And then this will be uploaded to YouTube with the rest of ours, accessed as often as you want. The Excel spreadsheet we use with our clients. If you would like a copy of it, feel free to email us and we'll be happy to send it to you. Thank you.